Welcome to XRP Pro Ledger, and today we are going deep on a story that most people in the crypto community are reading as a Tether story, when it is actually an XRP and RLUSD story. $4.4 billion. That is the total value of assets that Tether has frozen since it gained the technical capability to do so. And in the months of April and May of 2026 alone, Tether froze $515 million across 371 wallet addresses, executing actions in direct coordination with OFAC and the United States Department of Justice. I want you to stay with me through this entire breakdown because at the 7-minute mark, I'm going to show you exactly what happens to the institutional capital that is leaving Tether, where it is going, and why the mathematical destination of that migration creates a direct and calculable tailwind for XRP that most people in this community are not connecting. But first, let us establish what Tether actually is in 2026, because it is no longer what most people think it is. Tether began as a neutral stablecoin, a dollar equivalent that anyone could hold and move without interference. That positioning is gone. When Tether freezes $515 million in a single month in direct coordination with OFAC and the Department of Justice, it is no longer functioning as a neutral financial infrastructure. It is functioning as a programmable financial surveillance layer operating on behalf of global law enforcement. And here is the question that every institution managing significant capital is now asking internally. If Tether can freeze $344 million in a single action on April 23rd of 2026, what stops them from freezing yours? That question is not theoretical. It is driving real capital allocation decisions at the highest levels of global finance right now. Now, let us understand why this matters specifically for the institutions that the XRP community should be watching. The institutions that need stablecoins are not retail traders looking for yield. They are banks, payment providers, asset managers, and corporate treasuries that need a dollar equivalent asset they can move across borders, hold as collateral, and use for settlement. For these institutions, the programmable freeze capability that Tether has demonstrated is not a feature. It is a liability, an asset that can be frozen by a third party at the request of a government agency without the holder's consent or advance notice is not a neutral treasury asset. It is a conditional asset, one that can be confiscated under conditions the holder cannot fully predict or control. And institutional risk management frameworks do not tolerate conditional assets in treasury positions. The migration away from Tether is not driven by ideology. It is driven by institutional risk management discipline. Now, let us talk about where that capital is going, because this is the connection most people in this community are missing. RLUSD is Ripple's regulated stablecoin, launched in December of 2024 with New York Department of Financial Services approval, backed 100% by USD deposits, short-term US treasuries, and cash equivalents, audited by Deloitte, custodied by BNY Mellon, over-collateralized at a 7.1% surplus as of April 30th, 2026, with circulating supply of $1.44 billion backed by $1.546 billion in reserves. This is not a stablecoin that was designed to compete with Tether on volume. It was designed to replace Tether for institutions that require regulatory certainty, audit transparency, and custody by a recognized financial institution. BNY Mellon is the world's largest custody bank, over $47 trillion of assets under custody. When BNY Mellon agrees to custody RLUSD reserves, it is making an institutional determination that RLUSD meets the standards required for regulated financial infrastructure. That determination carries weight that no community endorsement or social media campaign can replicate. Now let us talk about the regulatory pressure that is accelerating the Tether to RLUSD migration across multiple jurisdictions simultaneously. In the European Union, MiCA enforcement is creating what regulators are calling compliance fragmentation. Exchanges that want to operate in the EU are being required to offboard stablecoin products that do not meet MiCA's reserve and transparency requirements. Tether does not fully meet those requirements. RLUSD does. In the United Kingdom, HM Treasury's consultation on bringing stablecoins into the formal payment services regime is creating the same pressure dynamic. Institutions that want regulatory certainty in UK markets are evaluating compliant alternatives to Tether. In the United States, the Genius Act framework is establishing stablecoin issuer requirements that align with what RLUSD already meets, including full backing by liquid assets. AML and CFT program requirements, in compliance with OFAC sanctions rules. Three major jurisdictions, all moving simultaneously toward regulatory frameworks that RLUSD already complies with, and that Tether struggles to meet. The regulatory pressure is not coming from one direction. It is converging from every major financial market simultaneously. And here is what most people miss when they analyze this migration. Every institution that migrates from Tether to RLUSD does not just create demand for RLUSD, it creates demand for the XRP ledger infrastructure that RLUSD runs on. Jack McDonald, Ripple's SVP of stablecoins, confirmed this explicitly at Consensus 2026. Every single XRPL activity involving RLUSD requires the native XRP asset. Transaction fees, ledger operations, large transfers, all of it runs on XRP. No exceptions, no workarounds. His exact framing was precise. XRP is the essential grease in the wheels of every RLUSD transaction on the ledger. That means RLUSD growth is not competing with XRP utility. RLUSD growth is XRP utility. Every dollar that migrates from Tether to RLUSD on the XRP ledger creates mandatory operational demand for XRP. Every institutional treasury that replaces its Tether position with RLUSD generates non-discretionary XRP transaction activity. Now let us talk about the scale of what is migrating. Tether's market cap is approximately $140 billion. RLUSD's market cap is $1.44 billion. The institutional migration from Tether to RLUSD is in its earliest stages. If RLUSD reaches $5 to $10 billion in market cap, analysts project an additional $50 to $100 billion in XRP market cap through increased burn rates and liquidity pair demand. That projection is not based on speculation. It is based on the mechanical relationship between RLUSD transaction volume on the XRP ledger and the mandatory XRP activity that every RLUSD transaction generates. Now, let us connect the RLUSD adoption story to the institutional infrastructure picture that is assembling around XRP simultaneously. Binance natively integrated RLUSD on the XRP ledger in February of 2026, adding RLUSD/USDT and RLUSD/XRP trading pairs. This gives RLUSD access to the deepest liquidity pool in the global crypto market. Bitnomial accepted RLUSD as native margin collateral for CFTC-regulated derivatives. The SEC reduced the broker-dealer net capital haircut on RLUSD from 100% to 2%. Mastercard is settling credit card transactions using RLUSD on the XRP ledger in production testing. Each of these integrations is a separate demand source for RLUSD, and each demand source for RLUSD is a demand source for XRP activity on the XRP ledger. Now let us talk about what the supply picture means for this convergence. Exchange reserves have dropped from 3.76 billion XRP to approximately 1.66 billion XRP since October 2025. That is a 56% decline in liquid supply in under 8 months. As RLUSD adoption scales, as institutional capital migrates from Tether to RLUSD, as every RLUSD transaction generates mandatory XRP activity, that activity lands in a market where the liquid supply has been systematically compressed by 56%. In whale wallets controlling 68.5% of circulating supply are holding that supply in private custody, not making it available to absorb the demand that RLUSD scaling creates. The Tether to RLUSD migration is not just a stablecoin story. It is an XRP demand story arriving into a supply picture that has been compressed to historic lows. Now let us talk about the Clarity Act dimension, because the July 4th timeline connects directly to the RLUSD adoption trajectory. The Clarity Act's passage would permanently codify RLUSD's regulatory status as a compliant payment stablecoin under United States federal law. It would create the legal framework that accelerates the institutional migration from Tether to RLUSD in US markets. Every compliance department that has been evaluating RLUSD gets legal permanence the moment the presidential signature converts the bill into federal law. The Tether to RLUSD migration that is already happening in response to MiCA enforcement, UK regulatory pressure, and OFAC freeze risk accelerates dramatically when US regulatory certainty is added to the picture. Now I want to address something directly, because this community deserves a rational voice on what the Tether vulnerability actually means and what it does not mean. Tether is not collapsing. Its market cap remains approximately $140 billion. The migration is institutional and gradual, not a sudden flight. The bull case for RLUSD is not dependent on Tether collapsing. It is dependent on regulated institutions making rational risk management decisions. Choosing a fully audited, BNY Mellon custodied, NYDFS regulated stablecoin over one that has frozen $4.4 billion in assets and operates as a de facto compliance arm of global law enforcement. That rational decision is already being made by Binance integrating RLUSD, by Bitnomial accepting it as margin collateral, by Mastercard using it for credit card settlement, by the SEC reducing the broker-dealer haircut on it to 2%. The institutional signal is visible. The migration is measurable, and every dollar that migrates from Tether to RLUSD creates mandatory demand for XRP. Now I want to talk about what most people in this community are getting wrong right now. XRP is holding near $1.45. Tether has frozen $4.4 billion and is operating as a government compliance tool. RLUSD has BNY Mellon custody and Deloitte attestations. Binance, Bitnomial, Mastercard, and the SEC have all positioned around RLUSD. And the retail market is watching a sideways price chart and wondering when something is going to happen. Something is already happening. The institutional migration from Tether to RLUSD is creating mandatory XRP demand right now. The supply that would absorb that demand has been compressed by 56%. The whale wallets that have accumulated 68.5% of circulating supply already understand what this migration means for XRP. They position before the headline arrives. The retail market is waiting for the signal. The entities locking 68.5% of supply already calculated what $4.4 billion of frozen Tether assets means for the migration to RLUSD, and they acted on it. So let us zoom out and see the complete picture assembling right now. Tether frozen $4.4 billion total, $515 million in April and May of 2026 alone. Operating as OFAC compliance infrastructure, MiCA EU enforcement forcing platform de-risking, UK regulatory deadline approaching, Genius Act US framework aligning with RLUSD standards, RLUSD at $1.44 billion backed by $1.546 billion in BNY Mellon custody, audited by Deloitte. Jack McDonald confirmed XRP non-optional for every RLUSD XRPL transaction. Binance natively integrated RLUSD on XRPL. Bitnomial accepting RLUSD as margin collateral. SEC haircut reduced from 100 to 2%. Mastercard settling on XRPL. Exchange reserves down 56% since October 2025. Whale wallets 68.5% of circulating supply. Clarity Act, July 4th target providing US regulatory certainty. The migration from Tether to RLUSD is not a prediction. It is already happening. And every dollar that migrates creates mandatory demand for the asset that powers every RLUSD transaction on the XRP ledger. If this analysis changed how you were thinking about what the Tether to RLUSD migration actually means for XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the move.